Hello and welcome to Weekend Wisdom. Today, we're going to talk about life insurance for young families. So grab your cup of coffee, sit back, and let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, don't forget to subscribe to our channel. Also below, show more for additional links and information on today's video. So Wealth and Wisdom, yes, we have a wealth management practice, but as part of that, we do life insurance. In fact, we have a separate company called Beach to Bay Life Insurance to handle those needs. So life insurance is everybody's favorite topic. Well, not really, especially when you think about death and taxes and the stereotypical insurance salesman.
Bill, I sell insurance.
What a shock.
Do you have life insurance? Because if you do, you could always use a little more. Am I right or am I right or am I right?
Classic, right? So first up, let's look at the facts. Sure, 60% of Americans have life insurance. But of those, only 47% have $100,000 in coverage or less. 21% have $25,000 in coverage or less. Those who have the least amount are those who need it the most. Young families, those with children under the age of 18, which I have 3. In that particular case, 37% have no life insurance at all. Another 32% have less than $100,000. So we are really underinsured in this group. So let's talk about how much coverage you need. Simple rule of thumb, 10 times salary, 20 times salary, sum of all debts. Now, if you were to take a simple example, $45,000 over 10 years, $450,000 obviously. I would add an inflation rider of about 3%. That'll get you about $515,000. But don't forget the mortgage, because that's just salary, the mortgage and any other debt. So you add all that up, and that should be the amount that you need. For stay-at-home parents, critical job. They are busy cooking, driving, laundry, cleaning, you name it. Salary.com, in fact, came up with a number, the value of that stay-at-home parent, $143,000. Wow. Thanks, parents. So, now you realize you don't have enough coverage. What is the best option for you based on coverage and dollar amounts? Your first option would be term insurance. This is the easiest. You can go through what's called simple underwriting, get approved very quickly. It's also the least expensive insurance. It is for a term though, 10-year, 15-year, 20-year. How do you determine that? You know, in our household, I have permanent insurance. I have term insurance for my wife, and it's covered while they're of school age. So once the last one's out of college, we did a 20-year term policy to cover her. Next one, permanent insurance, and it is permanent. So it goes for your entire life. Plus is, you're covered forever. Minus, it is more costly. Now, if you're younger, I got mine in the mid-30s, I think, and it was very inexpensive, really. I think I pay $140 a month, so it's not that bad. And I have a pretty significant amount of coverage. So between these two, you should be able to get pretty affordable coverage, because in a young person, we have some young clients where their term insurance for a $500,000 policy is about $150 to $175 a year. That's it. So hopefully today we told you why you're underinsured, what you need to spend, and what would be best for you. If you need additional help, we've got links below, and I'm sure Michelle's putting it on the screen right now. You can go to our insurance website, get a free quote, and information on what would be right for you. As always, we appreciate you watching. This is Michael Loftus for Wealth and Wisdom TV.